Hey everyone, welcome back to Friday Crypto. My name is Chase. Today we're going to be looking at Bitcoin and we're going to focus primarily on the 100-day and 200-day moving averages. Why? Well, we're going to look at history and see what those moves tell us, going all the way back to the beginning of Bitcoin. So we're on the BLX chart. And you might notice the price here if you look to the right. Might a little bit of a shocker. No, BLX updates every day. So if you're looking at the daily chart, it only opens updates on the closes. If you're looking at the weekly, it only updates on the weekly. You got it. So Bitcoin actual price is right here. Okay, so fear not. Bitcoin is not cataclysmically dropped just yet. So let's get going and get right to it. So the 100-day is in the blue, right? And the 200-day in the red, right? So historically, the 200-day, once you fall below that, it's just more bearish than not. So, and not only that, when you start crossing moving averages, your lower time frames over the bigger time frames, that's also spells some kind of trouble. And if you want more illustration of that, let's just look real quick. So here's our 21, our 50. We leave off those and just looking at this, right? So just short and sweet. Look at your 21, your 50, 100, 200. They're sorted out least to greatest, right? When you're doing great, your price actions on top of your faster moving ones, and they're sorted out very, very bigly, right? The bigger the gap, the better, the more powerful the move. So you can see that. And then when you start getting tangled up is when the trouble starts brewing. Okay, so just to kind of show my point there. Okay, so obviously if you're going to say bullish or bearish when you're crossing down moving averages, it's obviously more bearish than bullish, but not necessarily, catastrophic. And that's what we're going to look at today. So our current one, have we crossed? Yes, we've crossed back in February, mid-February right here, right? So, and what have we done since? Well, we've held resistance on that 100. So obviously a big step for Bitcoin is to get back above that. Okay, so, and how about the previous one? What did we do then? Well, we crossed here, and was the bottom almost in? It was almost in, right? Another handful of days or maybe a week or so. So, and then we started rising again, right? And then here's our cross back up. So how long was this cross? Well, we're going to look at that after we look at all the crosses. We'll look at time frames and kind of what those signify, and what we could maybe gather from the current situation. Okay, but first and foremost, let's look at the crosses downward. We're not going to cherry pick any data, so this is, some people might omit that, but that was a cross down, right? You can zoom in here, and we got above it, and then we crossed back in it, and you could see that wasn't really any kind of bearish sentiment, right? So this is the pandemic, if you're wondering. So, barring this pandemic crash, look at this crash, this cross, excuse me. And when we crossed, the bottom was almost in, right? Minus the pandemic, right? We're omitting this. We're pretending a black swan isn't going to come again. So again, look at this. When we crossed the 100 down from the 200, the bottom was right there, right? A week or two away. Okay, so now let's go back further. This is certainly probably the most significant one right here. The 2018 bear market, right? So there's 2017 peak, the massive run up. We crossed the 100 over the 200. And even then, the bottom's pretty much in already when you cross that. We win, at least for the short term on this one. Now, this took some time to cross back up, right? This is the longest. So let's go back even further. Going all the way back. You got to go all the way back to 2014 now. And we actually got kind of two crosses here. So first one down, again, the bottom was roughly in or not far from it. We've already bottomed here after we crossed, okay? And then come back down, cross back to the upside, and then cross back down again. And this one lasted, again, a significant amount of time, and that was pretty bearish. We held resistance on that 100 pretty much all the way down, making a couple runs here and there, but until you get those crossing back the other way, it's tough to do much of anything. So cross down there again, that led to a rally, so no significance there. And going back all the way to we're now in 2011, the first time, right? This takes some time to get these going. So 2011 was our first cross, and that lasted, we'll see. Now we can start doing the times. So again, when we crossed here, the bottom was still. So almost every single cross down, the bottom was either very close to in, already in, just based on the charts, think about that. So the bottom may not already be in, but it's been very close, except for that one occasion. We'll look at that again. So the cross here. Now these are going to be rough estimates because I'm not going to zoom way in. Right. So once we crossed, how long did it take until we uncrossed? So we crossed back to the upside to get more bullish again. Well, let's take a couple measure moves. So here, roughly, look at that, 140-ish days. Okay. So let's, again, these are rough, right? So there's cross down. When do we cross down and cross up? That was, not even, 20 some days, right? So nothing there. How about the significant ones down? Okay, so here's cross down, cross up, just over 100 days again. So first one was 140. This one's just shy of that, a little bit shorter. Here's another cross down. This is a big one, right? So let's get our charts, and we'll look at a cross about right there. And until we cross back up, this one was almost 300 days. Okay, so that was a big one. Then the 2017 bear market, bull market, the 2018 bear market. We're starting right here, cross, and let's see how long. This is the longest one, I believe, over a year. So now we're approaching almost 400 days, and we held that 200-day EMA. Or this is the SMA. These are SMAs, excuse me. 200-day SMA and 100-day SMA, and we held under that 200 and mostly under the 100 for the entirety until we started crossing. You can see right here at after the absolute bottom, we started getting our price action up, and we got back above the 100, got back over the 200 in a pretty quick fashion. Then we crossed back up. So that was almost 400 days. So fast forward to 2019, there's a cross, and didn't take that long. Another about 140 days or so. We crossed there, back to the ups, down and up. That was a real quick one. And then fast forward to, current market conditions. Let's zoom in here, and we will see. So this time, how long? Let's see, about 100 days again. Yeah, seems to be about 100 days. So we will see how about now? 100 to 140 days have been pretty much the average, right? Barring that 2018 one. So 100 days puts us towards the end of May. 140 days takes us out to, maybe 4th of July or something like that. Now you could see that we're going to need a dramatic about face turn. How are we going to get that? Prices are going to have to obviously be above the 100-day in order for the moving average to turn up. And you could see what kind of a move we made back in, remember, July, August, when we started making that run. Look how much the prices had to increase to even turn this moving average. So yeah, it could be some time. Certainly if we spend more weeks down here under the 100-day, it's going to take a little bit longer. So 100 days again was around towards the end of May. That would probably be the earliest that I would see it doing, just unless we start melting up to the upside, which anything is possible in Bitcoin. But looking at this, you can see we're not even close. We're still diverging. We're getting farther and farther apart right now. So this could change any day, or start to change, right? If you start getting these massive rallies. But you can see this one took over what was it, 100, almost right on 100 days. And look at the rally that it took to do that. So we have no signs of a rally yet. Now obviously this kind of came out of left field and just started out of nowhere. Certainly we could do that again, but unless we start doing that again, we're probably looking at least until May, right? May, June. Like probably minimum. Now that doesn't mean prices can't rise and slowly rise, right? And continue to rise. That would be great if we could do something like this, right? Let me show you here with our little trusty dusty crayon. If we start making, higher highs here and continue this, and then we kind of put in this flat top here on this 45K level, and we just continue to, march up the stairs here and then get this kind of this breakout here, this would be ideal, right? So, still look at this time frame though. We're still looking around the end of May or June. Prices can continue to steadily rise. This will be an option for sure, right? So don't mark this out. Don't think that we have to just keep going down in massive bear capitulation, although you need to be ready for that as well. But remember, almost every single time that these had crossed, the bottom was either in or very close to being in within the next handful of weeks. So how are we gonna? We'll have to wait and see, right? We have to wait and see. Hindsight's always going to be 2020, but we have our cross here, mid-February. Have we? Is the bottom in, or is the bottom close to being in? Are we going to fall down here in the next, handful of weeks and continue with the previous 10 years of kind of history here? We will wait and see, but you've kind of give you a rough estimate on kind of when we could get macro level bullish again. It's probably at the earliest, and that's assuming the prices continue to slowly or quickly rise. Probably at the earliest, super full-on bull mode again would be, right, let's say June 1st. The latest, the latest is it could be years, right? If you ask some bears, but the latest, we looked at, on average, that 100 to 140, we're looking somewhere between June and July, potentially. Now, obviously, we're going to be able to tell that as the weeks progress, because if we keep building up the stairs, then we're still on track. If we have, some slippage, or I don't even know if that's a thing, some slippage down the stairs, then, those are probably delayed levels, right? So we either kind of bottom here in the next week or two based on, the past 10 years of Bitcoin. It seems like that's what it tends to like to do, minus the bear, the black, all kinds of animals here, the black swan, the bears, the one anomaly on all of this was the 2018, right? That crossed and it just went full-blown bear market. But we are still not following this structure yet, right? What's different? Look how many rallies we had here. Massive fall down, 100% rally. Big fall down, 80% rally. Big fall down, 50% rally, right? We're not having those. We're just kind of finning a stab you, slap you, kick you down the stairs even more. So we will see what we're going to be doing. But now let's say we do start doing that, right? So say we come down here and we do come down a little bit more and kind of form this kind of triple bottom, and then we come back up here, and then we hit this, and then like say everyone turns bullish again, we get in the mid 50s, and then we start coming back down again without making another high. Then we can start getting our warning caps on, because we could be looking at a massive kind of drawn out bearish kind of sentiment here, and we could be looking at something like this playing out for the entirety of the rest of 2022. However, that's a distant bridge, so we'll cross those bridges when we get to them. So wanted to get the big picture. This still has potential to play out, but until you start making lower highs on a bigger picture scale, no real big cause for concern yet. 40K is kind of the line in the sand right now for the immediate term. We can go back over to Bitcoin to kind of look at this on a little bit of a timelier price pattern. So let's remove all of this. So 40K, if we get above that, we can kind of get a little bit more short-term bullish at least. I would say 40K is kind of the tentative line in the sand right now. Obviously, we want to get above the 100 day. We can put on our 21. Let's put on our 21 here. Let's actually put this on the weekly and kind of see what we got. And let's remove these guys. Let's put on our 21 week and take a look-see. So let's zoom back in here. Here's our 21 week EMA. This kind of separates the bulls and the bears in the grand scheme of things. So you can see we've made several tests of this 21 week, and then all been pretty harshly rejected. Notice the wicks here. So that's a lot of people, selling pressure. We're trying to form these bottoms here, right? They're all pretty similar. So this is a good sign, right? We've made a low so far, a higher low. Here's that 40K line. I could start turning a little bit more bullish. I mean a little bit. Maybe a little teddy bear. But until we get off what's the bigger signs? Well, you can start to get way more bullish on the weekly if you clear this 43K level. Beyond that, you have there's a lot of steps for Bitcoin to get crazy bullish here. The biggest one in my mind is going to be this 46, 47K. Just based off this chart. That's not even my opinion. That's this chart's opinion. You got your February highs, all rejection here. This would also get us above the 21 week. This would take out our support that held for over a month here. So yeah, 46K is, potential massive bull run here coming, potential, right? We got to remember, we don't want to get like come back up. Remember that the big picture bear, right? If you have the lower highs, so we could do something like that, right? But we will for sure see a lot of money coming in if we start getting them back above 47K again. But we want to be aware that we don't want to do this, right? Something like that would be probably the worst case scenario, because then we're probably looking to do some kind of just full-blown bear cycle for the next 1 to 2 years. I mean, that's, worst case scenario for me, but this is probably going to take a long time to play out. We will cross each bridge when we get to it, but just wanted to throw that out there. The most bullish sign, what's the case for the bulls? Okay, so we've looked at the most bearish. What's the most bullish? I'm glad you asked. So the most bullish is, the low is in, right? And we start, we're forming a local bottom here, and we start to make some headway. Well, step one, make a higher high right there, around that 43K level. Take these levels out. What would that also do? It's probably going to take out that 21 EMA too. So this is going to be double trouble here. We're going to have some work to do here in the next couple of weeks. If we come back up here and test 42, 43K again, and you see us closing above the 21 week, yeah, there's certainly a case to be made that the bulls could be waking up. Again, take that out. That's step one. Let's take 46, 47K out. That's a huge step. And then we could potentially be seeing, the bulls getting ready to take off in a bigger way. We'd likely be, at that point where the 100 and the 200 are crossing back the other way. Watch your moving averages, support and resistance levels. Horizontal lines are going to be more significant than diagonal lines, right? You've seen everybody and their brother draw like these diagonal lines and wait for the breakout here, and then we're good, right? Remember this way back in February when everyone was drawing this line? And yeah, we're still potentially good, right? But you can see that these lines are very subjectively drawn, and more important than diagonal lines like this are horizontal support and resistance lines. So I would focus on support and resistance like these, right? This is what you want to be looking at. You want to be breaking tops, finding support, finding resistance, and that's just kind of how you do it. That's the safest play, just like that. Very hard to subjectively draw support and resistance levels, much more than a few percent difference, right? You can see that maybe you could draw it here, maybe you could draw it at some wicks, but more or less that 45, 46, 47K level versus these diagonal lines, you could draw it from the wicks, you could draw it from the candles, you could draw it out here, you could draw it down here, right? You could draw it any kind of way your bias fits. So I would tend to stay away from people that only focus on those diagonal lines and breakouts and support and resistance levels. Most fundamental thing you can be doing for yourself to help you become a better trader. Okay, so this is a long video. Hopefully I'm helping you out, somebody out there. So the other case, I wanted to mention this just first briefly here before we move on. So notice that these three back in here, right? So we have major support right here around this 30K level. 30K breaks, all hell could break loose to the downside. We need to hope not, right? We need to hope that this is kind of, see these little candles right here, these three spikes separate. This is kind of testing the bottoms and forming a bottom. You like to have these separate kind of touch points multiple weeks apart, and that's really solid, building a solid ground level. And so we've had like two of those. You could argue two, right? I want them separate, not these two back-to-back ones. We've had one, right? We've had two. We really need to have three. And that doesn't mean we have to go down to 30K. I mean, even right around this like 35K level, just to, let me clean this up a little bit. Something like right in here would be just absolutely ideal for a bottom for me. So maybe 34, 35K, we hit this, and then it's this kind of time again. This is what potential, right? I'm trying to draw as many potential scenarios as possible so that if you see something playing out, remember that weird guy that wore the hat on YouTube talked about this. Okay, so potentially, the bottom could be in. We may not go any lower, right? Or we do something like this in the next week or two, and then everyone will think we're going back to zero, and maybe we stop right here, just like we did back here, and then we start working our way back up, right? And that's kind of it. And once we start doing this and clearing, you know, the 21-week EMA, we start holding this on a weekly scale. The 21-week EMA is taken out, hold that as support. Yeah, I think you'll see a lot of big money coming in, and you know, this will end up being hindsight 2020, looking very similar to this, right? Copy and paste, and see you later. Okay, so hopefully that helps someone out there some way, somehow. Let's go briefly look at the Gaussian channel real quick and see where we are, because this is important. Because why? Well, we're at the bottom. Okay, so we can move. Let's get rid of the moving average. Here we go. So here we go. The 5-day Gaussian channel. Bitcoin has held it since back in January. Close above it, close above it, close above it. And you might see this one. Did we close under it? No. We closed like $150 above the line, even though it looks like it. The levels are right there. We have still not closed under the bottom of the 5-day Gaussian channel. If we do, those are the buying times, right? These are the buying times under the 5-day Gaussian channel. We've talked about it for the past several months, almost over a year now. Buying at the bottom of a Gaussian channel, underneath the Gaussian channel, is your best time historically and for potentially years, and you're likely never see those prices again. If you do, it's not very long, right? We saw, what, 6K, 5K, and then we saw it with the pandemic, but minus the pandemic, you had never seen anything close to this again, right? You'd never saw anything close to this again, right? We're probably not going back to 5K. And when the time comes, you know, a year from now, we'll look back, and I have a great feeling that, you know, even if we get some kind of crazy spike down and you know, massive sell-off or something that everyone's calling for, you know, that will likely be your last chance. So anything under the 5-day Gaussian channel is historically the best buying opportunity in your lifetime. I'm just going to fill in the circle here. You're going to stay right here until I finish coloring this in. No, I'm just kidding. All right. Crypto fear and greed index, we're at 23, still in extreme fear. What a shocker. We've basically flatlined. So we're still in extreme fear. It's the longest we've ever been in extreme fear. And so we'll just throw it out the window. I'm just kidding. It's good to pay attention to. We need to get back in just neutral, greed, sure, whatever. We'll take it one step at a time. Quote of the day: a wheel finds a way, I must say. Good one. All right, car of the day. So I took this. This is me. I took this picture. I went to a car show. McLaren had a kind of a booth set up here. They brought the elusive McLaren Speedtail. So kind of pretty out there and looks, but it's insane. It has one seat. Well, actually it has three, but you see the steering wheels in the middle? The carbon cover-ups for the slipstream. It's super slippery. Look at the roofs, the roof scoop up here. And then we got the McLaren Elva on the side here, right in the middle. Look at this thing in the front. You see this? It diverts the air over you because there's no windshield. So these are a little bit more rare McLarens. Maybe you've never seen these before, but the pretty cool setup they had going. And then on the end, you had of course, my favorite, the 720S. I mean, I like these better, but I mean, I would never spend like $2 million on a car, but there you go. There's the center. Look at that. It's pretty slick looking. It's pretty aggressive. Look at how thin the headlights are. This is all carbon. The whole damn car is carbon fiber. Pretty amazing. Impressive. There's the 720S. Had to just slip that in there. You know me. All right. Hopefully that helps somebody out there. 24 minutes. You never get back. Hopefully you like this. Give us a thumbs up. Follow us on Telegram if you want more content than what you see here. I'll see you real soon somewhere, somehow.